For years, the story of Texas real estate was, well, it was simple. It was the smart bet, the safe choice. A guaranteed win fueled by all those jobs, that incredible growth, and just endless opportunity. But that story, it's starting to change, and the foundation of that guaranteed win is showing some serious cracks. So let's dive in and figure out why.
This one line from our source material just captures the whole shift perfectly. That feeling of absolute, rock-solid certainty, it's kind of gone. And it's been replaced by this growing sense of unease. So what's causing the whole thing to wobble?
And this lays out the conflict beautifully. On one side, you have the Texas promise, right? A safe investment, amazing cash flow, and what seemed like an endless line of buyers. But on the other side, you've got the emerging 2026 reality. Inventory's piling up, price cuts are everywhere, and affordability has become a massive challenge. The gap between those two, that's where our story is happening right now.
To really get what's happening today, we've got to look at how we got here. Let's unpack how Texas built this incredibly powerful narrative of being the unstoppable force in American real estate. I mean, it was a full-blown boom mentality. You had investors from all over the country bragging about their cash flow. Builders had wait lists that were months, even years long. And regular homeowners, they felt totally secure. They tell anyone who would listen that buying in Texas wasn't a risk. No way. It was the smartest move you could make. It felt like everyone had bought into this story of endless growth.
But here's the thing. Even the strongest foundations can start to crack under pressure. And right now, we're seeing these huge statewide pressures that are challenging that old promise. And they're affecting everyone. Homeowners, buyers, investors, from El Paso all the way to Houston.
And here they are, the three big culprits. These are the common denominators of stress you'll find all across the state. First, mortgage rates have just stayed stubbornly high. Second, property taxes are surging because appraisals are still chasing those peak-of-the-market home values. And third, insurance premiums are just exploding thanks to years of extreme weather. These three things together are squeezing budgets absolutely everywhere.
Now think about the sheer impact of this one number. The jump from a 3% mortgage rate to 7% doesn't just make your payment a little bit higher. For so many families, it took what was a totally doable monthly payment and turned it into what our source calls something punishing. This one factor alone just slammed the brakes on affordability for millions of people.
Okay, so those are the big statewide pressures. But let's zoom into the ground level, because this isn't a one-size-fits-all problem. Let's see how this stress is actually building in different kinds of cities.
This table lays it out so clearly. You got these different city archetypes, and each one has its own unique weak spot. In a tech hub like Austin, prices were just driven by pure speculation on endless tech growth. In a military town like Killeen, the whole market was built on the assumption of constant demand from the nearby base. And then you have a spillover metro like San Antonio, which got flooded by people priced out of even hotter markets. The point is, the stress is showing up everywhere, but for slightly different reasons.
Wow. This quote really gets to the human side of this whole thing. Can you imagine fighting through a crazy bidding war, paying way over the asking price, and feeling like you won, only to realize a year later that you're just stuck? That feeling of a victory turning into a trap is exactly what a lot of people who bought at the absolute peak are going through right now.
So all of these stories, from the tech worker in Austin to the military family in Killeen, they all point back to one central, inescapable truth about how housing markets actually work.
So, here's the core truth. It's the price-to-income principle. And it's really simple. At the end of the day, home prices have to be connected to the wages of the people who actually live and work in that community. Sure, you can have out-of-state investors and remote workers for a while, but when prices completely detach from what local teachers, nurses, and firefighters can afford, the market becomes fundamentally unstable. It just can't last.
And when that gap between home prices and local incomes gets way too wide, the path forward becomes almost inevitable. This isn't random. It actually follows a pretty predictable pattern.
And this shows that pattern, that life cycle, perfectly. Step 1, speculation and hype drive prices into the stratosphere. Step 2, those home values completely detach from what local paychecks can support. Step 3, all those financial pressures we talked about, higher rates, taxes, insurance, they all kick in. Step 4, that pressure cools demand way down, and suddenly, inventory starts piling up. And that leads to the final step. Step 5, a correction begins. Sellers have to lower their prices to meet buyers where they actually are.
So we're left with this huge takeaway. The Texas story isn't just about Texas. Not really. It's a reminder of a core economic truth. No amount of marketing, no boomtown hype can change the fact that home prices cannot stay detached from local incomes forever. So the only real question is, where is this reality check going to hit next?